Good morning, traders. Mark from TradingMarketTechnicals.com. Wanted to share a complimentary research video that we put out every morning in our subscribers' inbox. We have our stock market strategy video as well as a Pro Trader Premier video, which is a little bit more in-depth for more of the intraday active trader. Come check it out, TradingMarketTechnicals.com. You could also email me or support at TradingMarketTechnicals.com. Any questions you have. It's a great video. We put out a research video on all of the indices as well as gold and crude oil. We have amazing calls that we've had for the last several weeks, as well as our automated trading system that really is phenomenal. I mean, really is doing very, very well. So come check us out, TradingMarketTechnicals.com. Enjoy the complimentary research video. Good morning, traders. Welcome to the TMT stock market strategy video for Monday, May 30th. All right, guys, the retracement rally, the big move that we've had off of Wednesday's 2-week lows has been pretty dynamic. We've been really rallying on low volume. There's really not much to talk about as far as volume to really confirm this move. However, as you know, volume has been diminishing since 2009 lows because of the dark pools going on to these special dark pool routes. It's still there, you're just not being seen. However, moving forward, we are going into the end of the month and the beginning of June, which comes in mutual fund inflows. So if the analysis is correct, and we say that we're on our fifth wave and final push up of this whole bull market run, and I think it will end sometime at the end of the summer to maybe the fourth quarter of this year, and it really puts it into great timing because we're at the end of May. We've started now another move up. And it's a ridiculous move, right? People will say, oh my God, you see the market can never go down. It's never going down. You got to just put your money in, buy. And that's fine, but you have to be prudent in your investing, right? And for those of you, the stock market strategy videos, most of you guys are swing traders, anywhere from 2 days to months and even years for that matter. And I know that because we talk about our clients and they email us back and forth. So that being said, don't go out there and blindly just hold on to your long position if the market decides to turn. Once we call a top in this market, it would be obviously up to you to make a decision on, okay, I'm going to hold it, I'm going to add more. But what happens is that when the market's top and these extreme valuations, all right, and this extreme sentiment, at one point buying the dip's not going to help because you're going to buy the dip and the first dip will be bought, but the second dip and the third dip will not bounce. Basically, we'll go sideways and then we go start another leg lower. And that's what you've earned your money, basically holding on to positions, taking on the risk. Don't give it back and say that, oh, it's house money, because it isn't house money. It's your money. You've earned it. So just want you guys to be aware of that, because at any given moment, I think the market can reverse hard and stay that way. And I believe that's what's happening, just like the 1929 crash, the 1987 crash, and even the 2000 tech bubble. Look at what's going on here. I look at the markets and dissect the markets all day before the market opens. I do my analysis work at the end of the day as a professional, right? So what I'm seeing, and I've talked about this before, I see the VIX get hammered, right? It's the shortest ETF right now is the VIX, which is insane to even short something at historical lows. But nonetheless, they slam the VIX down and they buy the FANG stocks, right? They buy the Apple, the Google, the Facebook, right? Even the Teslas. And the Amazons, and they push that up. Why? Well, because the FANG stocks, if you will, are the most heavily weighted in pretty much all the ETFs out there, right? We have the NASDAQ 100, and just take that and put that in perspective with the S&P broad-based 500, right? So that's what's holding the market up. You take that away, you take all of those gains away, the market's not even close to being at where it should be, and now yet we're breaking to new highs. You'll see the NASDAQ chart when I show it to you. So be careful. There's a facade out there. All right, but that doesn't mean that as traders we don't buy the dip and we don't stay long. Absolutely, that's the theme right now. You can't fight it. I mean, you have to go along with it. That's what a trader is for, having really no opinion. You can have a bias for the day if technically is speaking that says, okay, we're making higher highs and higher lows, for example, let's be buying dips. That's fine, but don't take a strong opinion saying I'm shorting the market no matter what. That'll kill you. That'll kill your account. And that's not what you want as professionals, okay? So let's get right to it. We're going to look at the commitment trade reports too as well in gold and crude oil. UUP daily, you can see that here at lower lows and lower highs. I think we're ready for another pop-up like we've done here. We've had many retracement rallies and correctives since 2017. We had to move lower. Here's your corrective move. We're right back down again. Move lower, right back down again. Move lower, right back down again, right? So you had all of these patterns. And now this here, to me, looks like that I think we're ready for another move higher. Where we go, no one knows at the moment, but the 2560, which is the 200-day moving average, would be a likely spot. And then that would also produce another lower high from here, 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 and here. And then, boom, we go back down again. Now, why am I saying this? Because gold is coming into a really tough time of the month, which is June. And with the dollar moving higher, gold should move lower unless there's, of course, a fear trade that's going on, whether it be, God forbid, another attack or, a war going on. It's something really big that would trump what gold should be doing in June. But if everything stays status quo and it's a risk-on environment, gold should move lower, dollar should move higher. How do I get my confirmation? Well, we got to take out the 25.20 here. We take out 25.20 on a closing basis. We'll hit the 21 EMA and then, of course, the 50 and the 200. So here's your golden cross here to the downside, okay? This is your 5200 cross here. So that's very, very negative right now. So, which is nice because this will give us the corrective move in the dollar, and then that would push gold lower where we can start buying gold sometime in the second week of July, because July and August are two exciting months for gold. And if we continue with some fear, which I believe will happen, gold will even rally even more going into the end of the year. So as of right now, that's what I'm looking for in UUP. All right, ES Daily, you can see here our target's 2500, 2550. Really insane, guys. I mean, I've talked about it many times that just doing this for so long, this is just insane that you have one down day, the market takes it back and then some, and that's what everybody wants. That's what the bigger players want you to believe, because they want to get the stock market up here so they can get out of their ginormous long positions on their book. Okay, that's exactly what they want to hear. We got a buy signal back again in the MACD, so we should be all ready to go. I mean, I think even if we get a pullback for a day or two, it'll hold, and then we should rally up to this area here. That's exactly what we're looking for in the coming weeks. NASDAQ, you could see just crazy valuations. It's just insane to me. And I mean, really, guys, I could really care less. Just trade what I see. And I think if the NASDAQ isn't doing it, I'll go to another index, whether it be the Dow or the ES, and then look for different asset classes like gold to trade and oil and stuff like that. You don't have to be tied to one index if it's not really doing it for you. I mean, this is just crazy. I mean, we just totally went straight up since October. We went sideways for 5 weeks. We went straight up again for another month, and then now we're going straight up again for 7 days. But again, the high is going to be, Friday's high is going to be a little bit of resistance, and then you're going to come into the 21. That's going to be your next area of support, and then, of course, this area here. Okay, that's off the daily. Now, what I want to do is I want to show you the crude oil commitment and trade reports. We talked about crude being a great short. We've nailed the last two big shorts, and we're going to do it again. So here is your, as you can see, we're starting to move higher, making higher highs and higher lows. What happened? We kind of went sideways, and look what happened last Friday's report. Okay, they're back hedging, meaning that they're back saying that we're not going to see $50, or if we do, 50, 51, if at all, in crude oil. We talked about the supply chain, tons and tons of oil out there, guys. The only thing why this is rallying is because OPEC is talking their book, meaning that they're talking up oil. Okay, higher highs and lower lows and lower highs. Excuse me. We broke down hard. We took back half of this candle, so we should resume. And we need to take out this low here to get us back down here in these three little areas of support. Now, what I do like to see is I like to pick up a better short by taking out the 51.35 and actually getting up to this little area here. That will still produce a lower high from this previous high and this previous high. Overall, keeping the downtrend. Okay, so that's what we're looking for. And if it needs a day or two to develop, that's fine. But the commitment and trade reports are talking to us, telling us that that we're hedging up in here at $49, $50. Okay, the psychological level. So even if we get to 51, 51 and a half, I think that's it, and you can start shorting again. And look at these big areas of resistance here. Okay, and we are in our downtrend. Now let's take a look at our gold. Same thing as crude oil. We came in here. Look at the big difference in hedging. So they're hedging their bets right now that gold is going to be capped for whatever, a week, 2 weeks, who knows. But they're shorting. They're continually now shorting because they do know, as well as following seasonality trends, that gold comes into a soft time of year in June and then picks up July and August. Okay, so and you can see here if you go back, right, If you go back here, what does this look like? It looks like exactly the same to the right side of the chart, right? So if you looked here in June, here we are here, last week of May, we went bigger, and then look what happened, all the way into June and beginning of July. And what did I say? First, second week of July, look what happened. We start moving up higher. You see that? Going into the end of the year. And that's exactly what I believe is going to happen. All right. But again, risk on, risk off environment, news does trump the charts. Just keep that in mind. Here's your daily shot of gold. We know we talked about the symmetrical triangle we're in, and that's why I'm thinking maybe we get into like mid-June. We sell off in June, and we get into the apex, and then we start to really sell off here, and then start to rally in July. However, remember this area here, 1292, it needs to get taken out. Or if that does not happen, we should roll back down. 1200 is going to be key. If we lose 1200, we'll shoot right back down to 1135 here. You can see the volume zones are very, very tight. Very, very thin. Excuse me. Next is going to be GDX. And really, here's the culprit, guys, right? Here is the culprit. We need GDX to start to move higher. We are in this another symmetrical triangle. GDX moves first. The first sign is 2506 and then 2580. And then I think we got something there. Then I think we really start to move higher. And then I'm going to throw silver on the charts too as well for you guys, because silver, percentage-wise, will return a bigger move for you than gold. ZB daily, again, no change here. 155, 150. 150 would be a below short. 155 would be a long for the gap fill here in this area. Other than that, there is absolutely no trade here, guys, okay? 10-minute, TLT, same thing. We got to get above the 124. I like the fact that it's basing above the 8 and the 20 and just hovering underneath it. Now, you can see the resistance is starting to disappear, right, from dark red now to really light red. If that gets taken out, we should really see a really good gap fill area, but not until we get two closes above the 200-day moving average. All right, next is going to be your spiders, and we're looking at 2500, 2550. This upward channel measures up right around 250. That'll coincide well with the ES. It's about 8.5 points away, and I do believe that will probably get there again, unless something major happens. And remember, the fifth wave could stop at any time. It doesn't have to be the 2500, 2550, okay? But these are your levels for today's trade. And again, we see we made new highs. Resistance on Friday is your area of resistance. Transports, waking up a little bit. Still way underperforming from the ES and the NQ. But we're just getting a buy signal now in a MACD, and we're above this downtrend line. So maybe we get some legs and we start moving here. That'll help the bullish case of this fifth wave, and then we start to falter again. Okay, 171.34 is your next big area here. Got a small little pop here at 168, and I think it needs to get taken out. Okay, and then we have the IWM, which is another big red flag. Absolutely not moving. The IWM Russell 2000 small caps are not going anywhere. Bet it's a very, very good gauge of risk on, risk off, and it seems like some of the bigger investors are not really buying it. But however, if you look, we've been in a range all of 2017 from October. Okay, now since we had the election move, we had a small little bull flag, and then we got back in here. So now we've been sideways at the upper end of the range. Not necessarily bearish, but not necessarily bullish as well. We need to see this break out and move higher, and that would help the bullish case of this fifth wave. Otherwise, if this starts to roll over and we start taking out key areas of support, that's going to help the bearish case as well. So I keep saying, pay attention to those FANG stocks. Just put them on your watch list. You don't have to trade it, but if they start getting beaten up, that's going to help the bearish case. Last is a Q, as you can see here, how crazy this is, okay? Yesterday's Friday's high is going to be resistance, and of course 137.26. All right, guys, be patient because volatility will be here to stay. Trust me when I tell you that. Have a great day. Be safe out there, and we'll see you tomorrow.